Well, all right. Hello, hello, hello. Hello, hello. Let me see if my system will keep up with what's happening here. Going live. We're going to update last week. I noticed that I actually realized a little late after the market had closed, I realized that I didn't do our update for last week. I didn't do our update of the trades that we had previously done. Um, y'all tell me how the sound is going. If the sound is bad, we may have to stop and start again. Let me see. I see a comment coming up. Let's see if there's something. Saw you live and just say, hey, okay, good. Check to see if the check to see if the sound is going all right, Stacy. Is the sound doing okay? It's feeling like it's draggy here. Maybe it's not. It just looks like it. hmm Maybe it's not. It just looks like it. But I wanted to come back on and go through what were our trades from previously that we needed to update, and then we can look at maybe one or two more trades for this week. Okay. All righty. All righty. Let's put ourselves on our screen so we can see what we see. Yes, we're presenting. Okay, selecting screen one, and we're allow. Coolly high. I'm thinking it's coming up. It seems like it's just dragging. Okay, so we had a few good trades going last week. We had AMC. We've actually used rinse and repeated AMC for a while. We've had AMC, EOSE. You can say JK LMNOP. That sounds interesting, right? Um, GIS, HD, JD, KSI, and ZIM. Let's look at each one to see what did it do. What do it do? So in this case, we've got AMC. Let's go to AMC first. AMC, we own 100 shares that we purchased at $4.40. We did a covered call on that at the 5.5 strike. AMC is right at our strike. So we have until May the 5th, which is this Friday. We want to make sure that we keep it stays below 5.5. But even if it does go above 5.5, it's fine because remember, we paid $4.40 for it. If they get called away at 5.5, we're okay with that because that's an extra $110 we've had for holding, AMC. And what we can do if they get called away, we just go and sell another put on AMC. So we're going to let that one go for the week to see how it plays out. If it plays out on Friday this week, I'll make sure to come back on Friday with our Friday update. But at this point, I'm just going to leave the AMC doing its thing because we want 5.5. If it goes, if it breaches, that's fine. We, of course, could roll it up to 6 if we wanted to collect a few more premiums. But I'm okay with having them called away if the stock price goes up above 5.5. We also have EOSE. We had 100 shares of that. We have 100 shares that we got at 219. And we're doing a cover call at 2.5. Current price is $1.69. So this is where you can be a little bit upside down with your cover call. As far as you own the shares, we own the shares for $2.19, but they're only worth $1.69. So they're like 50 cents less than what we paid for them. You see over here, we're $50 in the red, $50, but we're continuing to sell covered calls in the meantime. So this one doesn't expire until May 19th, and we're at 12% profit here. So again, I usually close mine about 25 or so percent. When this drops down some more, we could close it and sell another covered call. Yeah, that's what we can do. So at this point, EOSE is just a hold and watch. At this point, this trade is going good, going very well. We have a 2.5 strike, and it's currently at 1.6 is the price of the stock. So we're okay there. Looking at General Mills, the General Mills trade that we put on a couple weeks ago, it's not set to expire until May 19th, but we have the 87.590 call. We have a call credit spread, right? Which means we need to be below 87.5 for this trade to be a good one. And at this point, we're right at the top of this zone. So it shows you here we're about $60 in the red. This is a 2.5 strike. So that trade is worth $250 of collateral. At this point, we're about $60 in the red. It expires in a couple of weeks. We'll give it a little more time. But sometimes what you do here is you go look at the chart so you can see what is it looking like on the chart. So you can see if there's some, if it's in a resistance area, you know, is it up in an area where there's resistance? Which General Mills, this is higher than it's been in a while. You see it's a high of 89.69. Let's see if we can go back a little bit and see. General Mills hadn't been up here in a while. It might be going into all-time high category. So we don't really know what kind of resistance. Looks like there is resistance here, or there was at 87, but it has kind of blown through the 87 resistance here. Let me move it a little bit faster. There we go. This was the last set of resistance was in this area here back in December, and it is a few dollars past that resistance area. So it's definitely, I wonder if General Mills is a good stock for the recession, in that General Mills does, you know, cereal and food and stuff that you still got to have regardless of what's going on, right? So that could be, we're going to keep an eye on it though, because this trade is still, we've got a couple more weeks on it. So we can see, remember, as a seller, that you got all the way up to the last minute. You don't have to worry about theta eating into your premiums, because you want theta to eat into you don't have to worry about it eating into your good bought premiums. You want theta to eat into your sold premiums. You want it to be lower, right? Okay, let's look at Home Depot. We have a trade for the 19th of May, also a 320 call credit spread. Price is currently at $298. This trade is at 44% profit. So it's actually ready. We can close this one out. So here you can see we collected the difference between these two is $1. So we collected $1 and now it's worth about 60 cents. $60. We collected $100. It's worth about $60. So that to me means Weeze is ready to close this one up, and we're gonna buy to close. Come on. The Home Depot trade is ready to close. Nope, that it keeps there. Okay, we're gonna close it at $57. We collected $100 in premiums. We're going to close it at $57. This is a 40% return on our collateral. Then it will release our money. The broker is going to release our money when this trade is picked up. The broker will release our buying power back to do something else with it. Okay, JD, we have a covered call going with JD. We have a 37 call and the mark is at 35. This trade is going really good at this point. Well, it shows here that we collected $66. It's currently worth $86. Well, what did we do with JD? Why does it seem like it's so high? That seems odd that it's as high as it is. As far as, yeah, that seems odd here. This down $127 when we were selling a covered call against this, and we have a 37 call and the price is at 35. This is weird. Oh, I get why now. Okay. So we bought JD shares at $36.50. We received them at $36.50. This was something that we had gotten. We were given or put 36 our shares in here. 30 at $36.50 was our price. They're currently worth $35. So they're $100. They're worth about $100 less than what we paid for them, which is why you have this bigger amount here of a loss, right? As far as the covered call trade goes, it is about $20 in the red, but we still got till May the 12th. So we've got another couple of weeks. We'll leave that one as well to see how it plays out. Kellogg's, we've got a Kellogg's Iron Condor. So we've got 70.81 is the current price, and we need to be between 65 and 70. So now our call credit spread is being breached, has been breached. So our put credit spread is fine and can probably be closed. We took in $25 on the call side. We took in $25 in premiums, and it's worth about $5 now. So that's definitely more than we want there, but we want to make sure that our call credit spread side is still intact. So we got to the 19th of May. I still think I want to close the call side, the put side. The thing is, when you close one side of an Iron Condor, you don't necessarily buy yourself anything because your buying power is still tied up on the other side. So it doesn't release your buying power to you. It does lock in the profit for you, but it doesn't release any of your buying power. So you can go ahead and close that side just so, while that side is in good shape, you can go ahead and close that from that standpoint. But, you also want to watch the other side of the trade. SI or Silvergate, we paid $2 for it. It's currently worth $1.30. We can go and do a covered call on that. So let's go see what kind of covered call we can get. We need a 2 strike on it because that's how much we paid for it. 2 strike for the first week, no money there. 2 strike for next week, no money there. 2 strike for May 19th. No money there. Looks like we have to go a little further. See, this is the drawback when you're with the lower price stocks. You may have to go a little further to find some premiums. And today may not be the best day. And the reason is because a lot's happening with the banks today. And Silvergate is a capital company. It has to do with banks. And because banks are all down today, you're doing a covered call. There's not the premiums for covered call or when prices, of course, premiums are better when prices going up. And price on these is not going up. So we just may need to hang tight on our Silvergate and just let it sit here right now. One thing we could consider, this is down. We paid $2 for, $2 per share, and it's down 34%. We could decide to sell the shares and be done with Silvergate, seeing that it's in the banking industry, right? And I think I just may do that. We just may close it. And yeah, we're taking a loss. We're taking a $69 loss. But even in that, we keep holding and the price keeps going down, then we're still going to be holding the bag. So let's go ahead and jump out of that ship while it's still got some sides on it for us to ride. So we can we paid $200. We did a couple of covered calls. We're going to sell it now for $130. That's a $70 loss. We took a couple of weeks of covered calls in, so we'll consider ourselves good to go. Keeping in mind the situation, no need to hold, on like I'm just gonna hold on for dear life. Good thing about shares is they don't have an expiration date, but there's no reason to hang tight on something that might be already on a sinking ship, right? So Zim is we're doing a covered call on Zim. We paid $22 for it. It's currently worth 16 and some change. Again, another one that is upside down for us right now. We did a covered call and collected $20, and now it's worth $9. So we really could close this one as well and enter another covered call. This one doesn't pay. This one's not expire until May 19th. But I wonder why that just said 18 when just a second ago it said 9. Okay, it says the trade price, and this is what it's worth. We're going to close it. Let's see now. Wonder why it says pay 8. We're not going to close it for $18 when we're not going to close it for that when we received 20 to get into the trade. So I changed it to 10. I'll leave it as a monitor. It says it's at 9. This is so weird that it did that. It's showing it was showing 9 when it popped up on the option chain, But then when I opened the trade to close it, it said it was $18 to close it. So I put the order in. We'll see how that plays out. Okay, so now let's talk about, I have a couple of trades just to see how do we trade options as a seller? How do we trade earnings? Sorry, how do we trade earnings as a seller? How do you trade earnings as a seller? Well, let's look. I'm only going to do one trade in this case, but to trade earnings as a seller, you're looking at, volatility is a good thing because volatility, it's a good thing for sellers in that we can get good premiums. Generally, when things are more volatile, the premiums are higher. And as a seller, you want higher premiums because you want to be able to collect higher premiums when you're entering. But you also have to be mindful when it's earnings time that the movement could be bigger than you want it to be. The movement could be bigger. So you have to be very careful about your strike selection when you're doing earnings. So I'm a fan of iron condors. I think what you have to do is look to see that you're in a safe enough place and you're going out enough in time, right? So when the volatility is high, the premiums are high. If anybody's ever heard of IV crush, which basically after a big event happens, all the premiums just zap out like whoop, gone. So you think you want the same thing to happen when you're doing these kind of earnings trades. Uber is trading in the morning before market opens. Right, it's going to trade before market opens. What's currently happening on Uber is this is a day candle right now. This is what's currently happening on Uber. I'm going to change it to a 5-minute chart and see what's going on there. Let's make it a little bit bigger so we can see what's happening on Uber today. How is Uber playing out today? We got a good little bit of up ride going today in their earnings. Getting in preparation for earnings. Okay, let's look at our trade. In Thinkorswim, they give you something over here called expected move. Expected move, which basically is where you expect price to move or not move in the period of time that you're looking at. So if we were looking, as a seller, we like short term. So if we were looking at the 5th or this coming Friday for Uber, and we're looking for a move of 3, plus and minus 3, up, down, up 3, down 3, then you can select strikes that are, outside of that range. You can select strikes that are outside of that range. So less than 3 is going to be, or take away 3, it's going to put us at 29.82. So we maybe would look at 29 on this side as a put credit spread. And adding 3, 33, I'm going to round it up. 33 plus 3 is 36. So we can look at 36 on the top side. Let's change to verticals. All right. So we've got, we said 29, 28.5. This is a 50 spread, 50.5 spread, which is $50 spread, which means it will require $50 of collateral to run this trade between now and tomorrow, right? Because the earnings is this tomorrow morning before market opens. So you can collect $6 for your $50 input. I'm going to change this up just a little bit, maybe get a few more dollars because we're going to spend $1 and some change on fees. So you're going to spend a little bit on fees. I'm going down to 29, putting in that trade, and I'm going up to what I say, 36, going up to 36, putting in that side for $9. Let's change this to 10, see if we can get one more dollar. Yep. So if we get 10 on one side, 7 on the other, that's $17 we're getting for $50 of collateral. That's about a 34% return on your money. You're going to get $17 for leveraging 50. So if you divide 17 divided by 50, you're going to get about 34% return on that in your one day or a couple days, because after the volatility shrinks back up, then the premiums will deteriorate and we'll end up with a few more dollars. Okay, let me see if this trade has picked up. Looks like the Zim doesn't want to sell, doesn't want to close just yet. We're going to, sometimes I'll do a cancel replace just so it'll maybe put me, I always think it's going to put me at the front of the line. I don't know if it ever does that, but I'm like, it'll put me at the front of the line if I do this. And it may not, right? It may and may not. I'm going to change this, the Uber trade. I'm going to change it down to $9. And so that can go ahead and pick up. Let's put it in good till cancel because we like it to pick up today. To be honest, we want it to pick up today. All right. That's the way we can look at an earnings trade. There's, earnings season happens 4 times a year, right? So you want to be able to check and see what kind of strategies can you use as a seller to capitalize on earnings. What kind of trades can you do inside of the community, the educator to trader community? We talk about all these things. We talk about how do we do earnings? How do we do short-term, long-term trades? We're running, at this point, opening for the membership, right? The E2T membership is running. Oh, make sure that if you haven't subscribed to this channel, go ahead and do that. Go ahead and do that. The E2T membership is open. It's a training ground. Training ground for sellers. Training ground for sellers. We don't have too many places where sellers are celebrated. It's not as glamorous to be an option seller, but it's consistent. It's not as glamorous, but it is consistent, right? You can go to http educatortotrader.com and get signed up. Sign me up for the Christian Jubilee. Okay. So I'm going to close here and I will see you all again. Make sure to like, subscribe, share, do all the stuff you're supposed to do. Pass the word around. The Educator to Trader is helping option sellers to win. All right. I'll talk to y'all later. Bye.